And I'm one of the only people who said, get all in on gold to the degree that I did when I did. And now, what's next? Duck and run. This is going to be terrible. So what now? I've helped you get to a certain point, and now people are wondering, well, what's the next move? Where do things go from here? And I put down a few notes, and if you want to see, it's very involved. This video today, we're going to get to everything. Anything you want me to be talking about, it's in this video. But when I get a bunch of questions all at once, all of a sudden everyone's asking about a certain commodity or a certain question, I always try to address it as soon as I can. And right now, a lot of people are wondering, what's the next move? What's the next step forward? And it's important to start from the very beginning. I've been in business nearly 30 years. Maybe it's 30 now, something like that. And about 20 years ago, I was talking about the problems with the economy. And in publications, I was talking about how this debt's unsustainable, how bad it's going to get. It was way too early then for anyone to care about. And then you get to this point, and we're here now, and then people say, oh my gosh, there's a problem with the debt. What do we do? This came out of nowhere. It's been clearly building up in terms of the monetary creation, in terms of the debt loads, in terms of the weakening and recessing economy. It's clunky, it's awkward, and this is not the way that a healthy economy is supposed to run, as you can see when you walk out the front door. If you like the fact that we don't have sponsorships, please click the like button. And in recognizing that the actual economy itself is under so much strain, and the US dollar being part of that anything that was purchased with the currency would require more dollars to buy the same thing, such as gold. So, gold prices are going to increase. But then, even that, people would say, yeah, get 5% in gold, or it's a barbaric relic, or it doesn't pay a yield, or put 20% in gold. And if you remember, on an ill-advised cruise, I filmed that video a long time ago where I said I put everything into gold and silver mining related investments, gold and silver related investments, precious metals, physical, and the gold mining companies that are Peter Leeds approved and passed 29-point Leeds analysis, the silver mining companies. And also, I'm looking at a lot of things during this big commodity super cycle that we're all in the beginning of right now. So knowing the economy was going the way that it's going and got to right now, that people are only now recognizing, even though it was clearly obvious decades ago, and you see it manifest and playing out in this incredible de-dollarization and rapid spike in gold and silver. There has not been a more aggressive move other than Bitcoin in its heyday to be such a significant trade and happening so quickly. And this was the biggest trade, and it's still got a lot of room to run. And as such, you're going to see a lot more gains from the silver and gold mining companies that I've been talking to you guys about in the Peter Leeds newsletter. So what's next? What happens now? What's the play? If you've been following me and you trust me, and actually speaking of that, tell me in the comments below how long you've known about me. Are you here for the last few months, or have you been here for decades? Please let me know. I want to get an idea who the viewership is. But here's what's going to happen with gold. It's going to continue to increase as long as the US dollar continues to decline, which will be continuously, probably forever. But people are still delusional. I heard again, I keep turning on the news. I got to learn this stuff. And they're talking about 5 years from now, 10 years from now, the debt's going to do this and that. And there isn't 10 years ahead of us with this kind of increase, rapid increase, which actually accelerated recently in terms of creating new money, taking on more debt. And then you see, I always tell you everything, it's one thing. Then you see the same kind of rise in auto loan delinquencies. The index of the leading economic indicators is pointing sharply lower. The recession is close to guaranteed to happen pretty soon, which will have all sorts of follow-on effects, such as increases in unemployment. And I tell you that there's a true unemployment number, and the number that you're given, the number that you're given through the government, is taking people out of the workforce and not counting them just because they're taking too long to get a job. Okay, they don't count as unemployed, even though they've been looking for a job for 2 straight years. No matter how much they're looking for a job, we just don't count them. Same thing happens with unfunded liabilities, which is the biggest portion of the American debt, that they just don't count that. This debt bomb is even worse than people who understand there's a debt bomb realize. But the US dollar will still continuously be used irresponsibly because that's the easier way. As that continues on and the de-dollarization worldwide continues and the American economy starts fading a little bit more than it already is, then the price of gold will continue to rise strongly to its eventual destination, which is tremendously higher because the US dollar is going to be going tremendously lower. 2026 will be the year that the dollar does what I've been expecting it to do for such a long time. And the same thing will then happen with real estate. It'll be all tied in with the recession. It's all going to happen at once. And you stick with the gold and silver mining companies. In my opinion, this is not personalized trading advice. I'm wrong plenty of the time. Stick with the precious metals mining companies that are Peter Leeds approved. Don't stress out. Don't worry about it. Don't try to day trade it. Just get set up and walk away. I said in the recent Peter Leeds team letter that I put out every week for Peter Leeds team members, who I hope to invite you to become one for as low as $3 a month. I was talking about once you get invested and you're all set up, don't stress. Don't worry about the short-term changes in price. Go read a book, hug your kid, ride a horse, take a nap, see a movie. Live your life. Take some time for you. You don't need to be all pulling your hair out and sweating and focusing on trying to get every nickel. You're getting every nickel. You just put your money into the right kinds of investments and then back away. Keep an eye on it, but don't worry about it so much. Gold companies are going to increase in price between now all the way up until they release their financials. Most companies doing that in April. It'll be the financials for Q4 and therefore the full annuals for last year, for 2025. And it's widely known that these companies are going to be releasing blowout earnings. That might lead up to a time where they actually drop in price upon the release of these strong financial results because they were priced for perfection and it's a buy the rumor, sell the fact event. So it'll be a temporary drop back, but then they'll just resume their rise again after that shock works its way through or absorbs through the system. Gold and silver prices will continue to go higher, and the mining stocks will continue to go higher until the point of pivot that you're going to have to watch for, where we get to a capitulation point in the S&P 500. Most markets and NASDAQ are just crashing. They're vulnerable to drop as much as 80%, 80. And then they're going to bottom out when they capitulate. At that point, you're going to want to sell all of your gold and silver mining stocks and move a lot of that money into the Magnificent Seven, the top American companies, the S&P 500. And while a lot of people have said, yes, buy gold, and they're proud that it went up, not a lot of them did what I did, which is to pinpoint invest, where I put about 85% of all of my investments into gold and silver mining related investments and physical metals. I went heavy on that because if you diversify, you get a little bit of everything. So you do a little bit of what everybody else is doing. What's the point of breaking even or doing as well as your neighbor? It's just me. I don't know if I'm greedy or what. I don't want to do as well as the average person. I want to do better than that. But overall, I would suggest that people stop having such a short-term view, especially if you're a subscriber to the Peter Leeds newsletter and you got to know these gold and silver mining companies I've been talking about. You're probably thinking that what you've seen over the last few years is normal, and it's not. We've had such swings, such moves. To see the price of a commodity like silver go up 6% in a day, down 5% the next day is absolutely insane. But because of all the action, all the activity, and all the excitement, people are thinking that's normal. And I'm trying to tell you to stop worrying about it so much, because what you're seeing right now is extreme volatility. And then it's going to go back to a slow, measurable, sustainable climb once things settle down a bit. And you got to be okay with that. Investing well is boring. It's frustrating. It takes a long time. And nobody knows that because of the incredible speed of these precious metals prices and the way they've been moving lately. You see how it was so important to see it coming, get positioned ahead of time into all these gold mining companies, and then let it play out. That's the way to invest. Don't be the other people who are just soon going to recognize. The retail investors in America have no idea about gold. They just aren't paying attention like the rest of the world is in the same way. But it's a matter of time, because even the media has now broken where they're talking about gold finally. You can't ignore it anymore. They tried to ignore it for so long. They talk about Bitcoin, they talk about oil or whatever, but they can't ignore precious metals anymore because of de-dollarization, the extreme performance, which precious metals have outperformed everything. And it's one of the only lifeboat trades in this crazy world right now. Everyone's getting out of the dollar. I hope you are as well too. Get into money, which is precious metals, gold. And I've been telling you that the risk premium is not being appropriately reflected in oil or gold based on macroeconomic events going on right now. You've got Germany, Norway, Sweden, Canada, France, and Denmark all massing in Greenland with their troops. But the AI bubble is going to burst. This overexuberant stock market is going to reverse. The recession that's inbound might kick that off, but there's a lot of other things that might kick it off as well, like a Minsky moment where it just starts crashing and it's not really an explanation. What happens is that people run to one side of a raft or they flow all their money into something and it's priced for perfection and every dollar's in there and there's no more buying. So it can only go down. And that's what we're going to see eventually when we get to the peak. And a lot of these Magnificent Seven stocks and a lot of these big major bellwethers in the American economy have already started dropping as much as 40% from their high. But as the recession starts, the markets are crashing. You're going to see increases in unemployment. You're going to see increases in homelessness, just like we saw in the global financial crisis, where families living in their van for a while because of economic conditions. But keep in mind, though, that economic weakness that we're going to be seeing is a deflationary force. When you're in a recession and things are crashing and the wealth effect is minimizing, that's deflationary. Less activity cools things off a bit. Just like artificial intelligence is extremely deflationary. So while I'm expecting inflation to spike back up, there are trends pulling it both ways. So whatever's going to happen, it's going to happen in 2026. You'll know clearly, okay, inflation's out of control and it's getting out of reach now. Even raising interest rates might not help. Or we just wither into this recessing economy that is just so much weaker than it used to be. I heard a comment about how much money is created from tariffs. And I just want to remind you that zero money was created from the tariffs. It was moved around from American companies, taken from them in import taxes, but it wasn't created. It wasn't generated. It wasn't manifested. It was just scooped up. It was just moved. But what we have to look forward to in the coming months is that the effects of the trade war are going to finally start being noticed. And I mean that in terms of in America, but also worldwide. A lot of restaurants, for example, that are victims of the whole trade war and boycott Trump and don't travel to America for vacation trends right now, they're going to be more meaningful now because a lot of restaurants, for example, they might have been able to weather through a year of that, and then now it's the real test. It'll be through this summer, 2026, we're going to know what true effect on tourism, not buying American, what that's going to look like, how it's all going to play out. Hopefully we can reverse this whole ridiculousness, but this is the situation we're in. I'm not making a political statement. I'm not for or against anything. I don't have a horse in any race. I'm just telling you what to keep an eye on because you're going to notice it now. And the oil prices came down so hard the other day because Donald Trump saying that, okay, maybe now we won't strike Iran because they're not going to do the executions. But things are still pretty bad and there's still killings there. And even based on comments that have been made that are making you think that we're not going to war with Iran, sometimes as a setup for an actual attack. Just like in Pearl Harbor, the Japanese delegation came to America to meet. And while they're there meeting, Pearl Harbor was happening at the same moment. One of the things that will fall off the economic slide is anything speculative, and that is cryptocurrencies. I've told you a long time that the problem with cryptocurrencies, a lot of them, the ones that are unlimited, therefore the actual value calculable is zero. If you could just make 1 million, 5 million more of whatever beer coin, then there's no value to it. But I said the problem is that most cryptocurrencies are a zero-sum game, so there's just some people making money while others are losing. And the problems are fragmentation and saturation. Fragmentation is that there's too many options. If there's 1,000 restaurants, most of them are going to go out of business. Tens of thousands of cryptos, a lot of them are going to go out of business, and many of them already have. And the saturation is that most people who are really diehard fans of cryptos, they'll have already invested most of the money they're going to bring to bear right now. They own whatever cryptos they're going to own. And if they're doing well, then they're definitely getting in deeper and deeper. And there's not a lot of money on the sidelines. That's going to be what drives up a lot of the cryptocurrencies. And so you're at risk as the wealth effect diminishes and as margin calls start, and the recession rolls into town and unemployment rises, you're at risk of a lot of these cryptocurrencies taking the hit. And I'm one of the only people who said, get all in on gold to the degree that I did when I did. And now what's next? Duck and run. This is going to be terrible. Make sure you're invested in a lot of these high quality companies that we talk about, and then don't be stressed out and don't worry too much. Just trust in the process and allow those gains to come to you. And the Peter Leeds newsletter comes out on average about 3 times a week. So if you think you're a subscriber and you haven't got an alert from us recently, check your spam folders, your junk folders. A lot of people are finding that our alerts are going straight into their spam folders. And if you like the fact that we don't have sponsors, please click like, and don't forget to tell me how long you've been around here. Are you a newbie to the Peter Leeds world, or have you been around for a few years? I love when you guys have been around for a while, because then you can tell other people exactly what I'm telling you, because people don't know me, maybe they just met me, that I've been talking about this and never changing what I was telling you since day one.
Look, many low-price shares are not great investments. With penny stocks, it is so important to look into every aspect and to be incredibly demanding. Whether you're brand new to investing or experienced, my team and I will help you out. We're going to tell you which penny stocks we believe are undiscovered, highly undervalued, and about to move in price.